Hello, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It is September 22nd. Let's get started with the charts. As you can see here, bonds have opened really nicely today. We traded really well yesterday after the Fed came in and said that they were not going to increase the short-term rate. We're currently trading at 103.81 this morning. This actually fell within my predictions day before yesterday. And man, I'm just so happy to see that happen. You know, it's nice to be accurate when you're trying to predict these things. And so at any rate, bonds are trading pretty well. We have support below us at about 103.40 and 103.23, the green lines. And we have resistance above us. Well, I shouldn't say above us. It was above us until this morning at 103.68 and 103.78. So here's a scoop. Jobless claims came out actually better than expected, but that really didn't have a big impact on the market. Home sales came out as well. It was okay. But the big news is the Fed did not increase the short-term rate yesterday. So a lot of the losses that we saw, look at the chart right here. That was when the Fed said, hey, we're thinking we might increase the short-term rate. But I think at the end of the day, it would be too much of a negative impact to our economy if they did. So they did not increase it, but just a slight mention of them a while back saying that they were going to increase it or possibly would. That's what really shut this market down. So we're starting to see some recovery from that. I really think that we're going to be trading, well, I'll get to my predictions here in a second, but to kind of quantify where we're at, Freddie Mac reported the average interest rate to be 3.44 at half of a point last month. The source is down here. We're a little bit better than that, so you might get something similar on average. An average consumer might get something similar, maybe a little bit less. So here's the predictions though. Consistent is short term. Everybody's kind of neutral on the short term on the analyst side. What's inconsistent is a long term. Some of the analysts are a little bit more neutral, like, hey, I think we're going to hang out here for a while. And the other analysts are pretty bearish on it. They think that the bonds are going to sell off. So I kind of think that we're going to go neutral on the short and the long. So my prediction is that bonds are going to range between 103.90 and 103.50. So from where we're trading at today, that leaves us room for about a 9-cent gain or a 31 basis point loss. So my call today, if you're closing your loan in the next couple weeks, I would probably take the gains and run. Take the chips off the table, cash them in, and call it a day. Because I think by not locking over the last few days, you probably made a pretty good call. Probably not get too greedy if it was me and be happy with my gains. But hey, nobody has a crystal ball, so let me know your thoughts. Down below, you can leave your comments. Let me know what you think you're doing. Are you going to lock it? Are you going to float it? Do you think they're going to get better? Like, what's your call? And don't forget to like the video. Everything likes to be liked, so does this video. I know you guys get tired of hearing that. And if it's your first time on the page, at the top left, you can hit subscribe. That'll keep you posted when we do updates, usually once, twice a week. And if none of this made sense to you, like how the bonds trade, how it impacts you as a consumer getting a mortgage, the top right, little guy scratching his head, that'll take you to Mortgage Bonds 101, teach you the basics on how bonds work and how they impact the rate that you get when you're getting a mortgage. Anyway, that's it for now. Have a great weekend, and we'll see you next week. Bye-bye.